everyone, welcome back to this week-long series of Week to Strength, wherein we'll strengthen your CA foundation preparation for Jan 2025 examinations. And in this video, we'll be discussing IO GST. GST is a subject that you learn in indirect taxes in CA intermediate, but of late in CA foundation examination curriculum, they've been questioning people's understanding on accounting for GST. So in this session, we learn how to account for the indirect tax of goods and service tax, what is collected on sale of goods, what is paid on purchase of goods, how to do the outset of them, set off of them, and how to pay it finally to the government. For this, I picked two questions. One question is from June 2024 examination. The second question is from June 2024 RTP. Before I teach you anything with regard to this particular solution, let me make you understand goods and service tax. This is an indirect tax where the impact and incidence is on two different people, otherwise than direct tax. In direct tax, impact and incidence is on the same person. For example, if I earn income and I pay tax on the same, it is direct tax, income tax. Indirect tax is, I am selling you my phone. When you pay the consideration to me, I will collect GST from you. So the impact is on you, incidence is on me. I will collect the tax from your hand and then pay to the government saying, hey, you know, this guy's tax this is. So I'll tell your name, your GST number, but collect it from you and I'll pay it to government. If it was direct tax, you would have paid directly. Because it is indirect tax, I will collect it from you and I'll pay it telling your name to the government. I hope you understood what is GST. Whenever I sell goods to you, I will collect the GST from you and pay it to government. To me, this is liability, because when I collect money from you, let's say my phone I'm selling it to you for 1000. On this 1000 rupees phone, if I collect 50 rupees GST from you, that 50 actually is paid by you, belongs to government. I am an intermediary. I collected it from you. After I collect, before I pay, this money is my liability. On the other hand, let's say I bought this phone from my supplier. When I bought this phone from my supplier, let's say for 500 rupees, I paid him, let's say 25 rupees GST. When I paid him 25 rupees GST, I paid it to him, not to government. He will pay it to government. What GST I paid will become my asset, and I can adjust it with the GST that I'm supposed to pay in the future. I bought this phone for 500. Then I paid 25 rupees GST. When I sold this phone to you for 900, let's say I collected 30 rupees GST from you. 20 I paid, 30 I collected. I can take the net off and then pay only 5 to government. I hope you found it too fast and not very easy to understand. That's the reason why we're picking this question, to understand this bit by bit. There we go. Let's get started. So previous year question, June 2024, we are seeing question 1C. Past journal entries for the following transactions in the books of Mr. Kapil. So we're going to do accounting in the books of Mr. Kapil. What is happening in the books of Mr. Kapil? Purchased goods from Sonu for rupees 1,50,000. We have purchased goods for rupees 1,50,000. And on this, there is a trade discount of 10%. And after availing trade discount of 10%, we are supposed to pay CGST and SGST also alongside at 6%. Let me write the entry, purchase account debit. And I have to pay money to Sonu, I will credit Sonu. Used to write purchase account debit to Sonu, and this used to be 1,50,000 minus 10% trade discount, that is 15,000. 1,35,000 would have been the amount. So you remember writing this 1,50,000 minus 10% trade discount here, 1,35,000. If not for GST, I would have created 1,35,000 to Sonu, creating a liability to be paid to Sonu to the extent of 1,35,000. Now because GST is applicable, the amount that I should pay to Sonu is not 1,35,000. I should pay Sonu 1,35,000 for the goods, and I should also pay CGST, which is Central Goods and Service Tax. I should also pay SGST, which is State Goods and Service Tax. These both, whatever I am paying, I will call it input CGST and input SGST, which will act like my asset. Later when I collect tax, that will be called as output CGST and output SGST, that will be adjusted to find the net amount payable. For now, this input CGST and input SGST are my assets. This is to the extent of 6% on this 1,35,000. So I would write 1,35,000 into 6%, which comes to 88,100 and 8,100. I have to pay Sonu 1,35,000 for goods, 8,100 of input CGST, 8,100 of input SGST. Putting it together, it comes to 1,51,200. Got it? So I pay Sonu 151,200. Sonu will pay the government 16,200 in my name as GST. Come to the next journal entry. The next item is sold goods to Mohit for rupees 50,000. We have sold goods to Mohit. We have not collected cash from him. Have we? Oh, we have collected 40% immediately. But let me split it into two separate transactions. And later I'll also teach how to write it in one single transaction. Whenever you sell goods to Mohit, Mohit is supposed to pay you money. So we are going to debit Mohit account. And after I debit Mohit account, my goods are going out. So I will credit sales. My sales is to the extent of 50,000. There is no trade discount in this case. I will credit 50. Understood this? I would have been debiting Mohit by 50 and collecting 50,000 from Mohit. But Mohit owes me much more than 50. Mohit is supposed to pay me 50 and he also supposed to pay GST amount, which I will collect from Mohit and then pay to government. How much is GST rate? 5% on this. So here GST will be collected by me. I am Kapil. I am Mr. Kapil. Mr. Kapil will collect GST from Mohit and pay it to government. So when I collect it, it acts like my liability because I have the responsibility to pay it to government. So let me write here to output GST, CGST and output SGST. This is at the rate of 5% of 50,000, which comes to 2,500 each. Totally Mohit now owes me 55,000. Mohit owes me 55,000, of which 50,000 is for the goods, 2,500 for CGST, 2,500 for SGST, together 5,000 rupees what he pays to me towards GST. I will pay to central government until Mohit's name. Come to the next item. Number 3. Goods costing 25,000 were withdrawn for personal use. This is goods taken out of the business other than by way of sale. When the goods are taken out of the business other than by way of sale, we should never credit sales. Should always credit purchase. If it is goods destroyed by fire, goods issued as free samples, goods withdrawn for personal use, goods given away as charity, in all of these cases, we should not be crediting sales, because the moment you credit sales in GP computation on the sales, you might apply percentage in trading account, which is not fair. Why? You have not sold goods. How can you make profit when you have not sold goods, my friend? So we will not be crediting sales, we will be crediting purchase. Wait a second. Before I go to this, I forgot this part. Out of this amount of goods sold to Mohit, we are supposed to collect 40% by check immediately. 40% of 55,000 he would pay to me. I would write bank account debit to Mohit account, and this will amount to 40% of 55,000, which is 22,000. Now I wrote Mohit account debit 55 and later credited it by 40% debiting bank. Instead of doing it, I can club these two entries to write one short entry. I can write Mohit account for the balance of 33,000 and bank account for 22,000 and credit our sales and output CGST, SGST by 50, 2,500 and 2,500. This is same that second entry which is written as 2 will be clubbed into 1. Either ways is totally accepted. You can write it either ways. You will be awarded full marks. Let's go to third one. Goods costing rupees 25,000 were withdrawn for personal use. Like I mentioned, we will be crediting our purchase account. I will credit purchase. I will debit drawings, or you can straight away debit capital also. Should not be an issue. Goods is 25,000. But these goods, when I had purchased, I had taken input of CGST and SGST here. Because these goods are not sold, this input CGST and SGST should be now reversed. Whatever we had debited here, I will credit. Usually, whenever the sales account is credited, we credit output CGST and SGST. But in this case, I would have to credit input because There is no sale here. There is consumption or there is withdrawal for personal use. It is reversal of the input that was recorded previously. It is reversal of input, not output. If I had sold goods, output. If I consume it, if I take it for personal use, then it is reduction of input which was previously debited. Got it? This is not sales. This is reversal of the purchases. Of the purchases I made for business, some are made for personal use. So I'm reducing from business purchase. I'm reducing from business input CGST and SGST. Understood this? That GST is to the extent of 6%. So compute 6% of 25,000, which comes to 1,500 and 1,500. Total value of the goods which is withdrawn will be 28,000 rupees. And this will be booked as my drawings, and this drawings will be reduced from my capital. Got it? Then let's go to fourth one. Last one here. Machinery purchased from Messrs Bright Industries for rupees 2 lakh plus CGST and SGST of 9%. Now the cost of the machinery is 2 lakh, the purchase price. On that they have charged 9% CGST, 9% SGST. This CGST and SGST what I pay, would have to check whether input tax credit is available. What do you mean by input tax credit? 18,000 what I will pay, 9,000 into 9% of 2 lakh, 18,000 CGST and 9% of 2 lakh, 18,000 SGST. Putting it together, 36,000 money what I paid to Bright Industries. If I can deduct it from the GST what I've collected on sales, input tax credit is available. If not, input tax credit is not available. Let me explain once again. Here we sold goods to Mohit. We've collected tax from Mohit 2,500, 2,500, 5,000. I told you this 5,000 I have to pay to government. Previously, I had collected some money, I had paid some money to Sonu towards GST. When I purchased goods from Sonu, I paid 16,200. Now, when I sold goods to Mohit, I have collected 5,000. Because I have already paid 16,200 to government, I will tell the government this 5,000 I will not give, I will keep it with me. If I am doing it, it is that 16,200 what I paid is taken as input. The amount which is paid on sales, amount which is collected on sales will not be paid to government. It will be kept with us. The amount which was already paid will be deducted. Amount which is already paid will be deducted. If the excess amount is remaining, then we'll pay. If there is shortage, then we will not. Did you understand? I'll give you a better example. Focus here. Input GST. Amount paid on purchase. Let's say it is 10,000. Collected on sale. Output GST. Let's say this is 8,000. So I have already paid 10,000 on purchase. Now I collected 8,000 from my customer. So no further payment of GST. No further payment of GST needed in this case. However, alternatively, if in case we do this, let's say input GST is 10, output GST is 12,000. On purchases I have paid 10,000. From a customer I have collected 12,000. Then what should I do? GST to be paid to government is 2,000. So I have collected 12. I have already paid 10 through purchases. Excess of 2,000 I will now pay to government. So this adjustment is there, no, 10 and 12. That is input tax credit availment. What is it called as? Input tax credit availed. With regard to this purchase of machinery, whatever I am doing right now, equipment from Bright Industries, we can make two assumptions. Assumption number one, input tax credit is available. If input tax credit is available, that amount will be written separately as input CGST and input SGST. If input tax credit is not available, if this asset is not eligible for ITC, then that 18 plus 18, 36,000 what we paid will be included in the cost of the machinery, which is 2 lakh. So machinery's cost will become 2 lakh 36. You would have done this in your depreciation chapter when you started with valuation of machinery. So let me show you the entries based on two assumptions. One, assuming input tax credit is available. If it is available, entry will be machinery account debit, input CGST and input SGST debit to Bright Industries. Machinery value will be 2 lakh and I am going to pay GST of 9% in state government form and 9% to central government form, which is 18,000 each. And I am supposed to pay to Bright Industries 2,36,000, of which 2 lakh is for machinery, 18,000 is CGST and 18,000 is SGST. If in case input tax credit was not available, then I would have recorded my machinery at 2,36,000 and I would have recorded my liability to Bright Industries as 2,36,000. Actually, answer ends here for this examination question, but I will take you one step forward and then teach you how to treat the net of the GST amount to be paid. Before that, we have one small adjustment here. Paid 1 lakh immediately by check and balance to be paid after 2 months. To Bright Industries, we paid 1 lakh by check. Bright Industries liability to me to the extent of 236, that is decreasing by 1 lakh. Debit it by 1 lakh. Credit, I have given a check for 1 lakh which will reduce my bank balance. So credit bank account by 1 lakh. And this will cover my accounting for this particular transaction. But what you would have to note further is, you observe here there is input CGST of 8,100, 8,100, together 16,200. You have already paid 16,200 to government. So output CGST will be 2,500, 2,500, 5,000 rupees. So you have collected 5, you have paid 16,200. You have already paid excess. There is no need to pay further amount. And that calls the end of the answer. There is output CGST, SGST, same thing repeated, and there is reversal of 3,000 rupees. Still, it's absolutely fine. Got that? If in case we had collected more money than what we paid, then there was a need for us to make the payment. I hope everyone understood this part. Going further, I'll teach you another question which is from our RTP for June 2024 examination. Have a look at this. Journalize the following transactions in the books of Gopal Traders. Discounted a bill of exchange of rupees 20,000 at 2% through bank. So we have given a bill of exchange to the bank and banker has deducted 2% discounting charges and paid us the balance of the money. So what would I be writing? I would write bank account debit, discounting charges account debit because it is expense, and I would create our bills receivable. Bills receivable is to the extent of 20,000. On this 20,000 rupees bill, there is 2% discounting charges. 20,000 into 2%, which comes to 400, is my expense. 400 I will not receive. From 20,000, if I deduct 400, I'll arrive at 19,600. That is what I'll receive from the banker, and that will be debited to bank account. Did you guys get this? Then I have another transaction on 8th of April, which is sold goods to Malik costing rupees 20,000 at 25% above cost, less trade discount of 10%. So cost is 20, add profit margin of 25%. Then you make it 25,000. From there you deduct 10% trade discount, make it 22,500. On that we'll charge GST of 6%. Let me show you the computation. The cost of the goods is 20,000. On this we have a profit margin of 25%. 20,000 into 25% is 5,000. This is actually into. Good. Then I have the selling price before giving trade discount as 25,000. I have given trade discount of 10%. Let me write less trade discount 10%. Trade discount at 10% comes to 25,000. 25,000 into 10%, which is 2,500. From 25,000 sale price, if I deduct the discount of 2,500, I'll get 22,500 rupees. This is before charging GST on it. Further, we should charge GST at 6%. I will write here, add SGST 6%, add CGST 6%. Compute 6% of 22,500. This comes to 1,350 each. Add them up, you will get 25,200 to be the amount including GST. So from my customer, name of the customer is Malik, I am supposed to collect 25,200. In 25,200, amount collected towards the goods is 22,500. Amount collected towards GST is 1,350 plus 1,350, which is 2,700. Let me write the entry. Malik account debit. How much is Malik supposed to pay me? 25,200. In this, sales is only 22,500. Balance 1,350, 1,350 is the money that I have collected towards GST, which is supposed to be paid out to government. It is output. I'll put it out to government's pocket. So I would write output CGST, output is GST. But before I pay this, I'll take the net of the GST if I would have paid earlier. This is with me, which I'm supposed to pay. If I have not paid any GST earlier, then I would pay this 1,350, 1,350. What if I've earlier paid some 2,000 rupees GST on purchase? Here I've collected 2,700. I've already paid 200. Only balance 700 will be no paid to government. I hope you understood this Malik transaction. See the next one. Purchased goods from Trends Industries for rupees 8,000 plus CGST and SGST 6%. So we purchased goods on April 10th. When we purchase goods, I will debit purchase account debit. The value of the inventory is 8,000. And am I supposed to pay our trend industries only 8,000? No, no, no. I'm supposed to pay them GST also on this. This GST I have paid trend industries, and trend industries will pay to government. So I can claim this as input. This is something that I've already paid to trend. So this will become input CGST and input SGST. So this is GST arising on the goods taken into the organization. What is the amount? It is to the extent of 6%. 8,000 into 6% is 480, 480. Put them together, 8,960 is what I owe to Trend Industries. Next, what do I have after this? Received rupees 5,800 from Amar Singh in full settlement of his account of 6,000. I'm supposed to collect 6,000 from Amar Singh. So my receivable or asset from Amar Singh is decreasing by 6,000. Credit Amar Singh by 6,000. Debit will be given to bank account to the extent we have collected, which is 5,800. And difference of 200, what I am not going to collect, will be called as discount. So I have collected 5,800 against the actual amount to be collected of 6,000. So the difference of 200 will be discount that I am allowing to Amar Singh. Got it? After this 16th of April, on 19th of April, goods are given away as charity, costing rupees 800. Selling price is 1,000, but I don't care about selling price because this is goods given otherwise than by way of sale. So it should not be credited. It should never be credited to sales. It should be always credited to purchases. I will credit my purchases account to the extent of 800. That is the value of the goods. Debit will be charity account. This charity will be later deducted from my capital like drawings. And it's not just 800. Why? Previously, when I purchased this inventory, I would have claimed inputs GST, CGST and SGST. Now, if I would have sold these goods, I would have written output. I would have collected money and paid. Because I have consumed these goods, now I need to reverse the input CGST and SGST, what I had previously debited. If this was sale, I would have credited sale, I would have credited output CGST and output SGST. Because this is purchase, I need to credit purchase, I need to credit input CGST, credit input SGST. So let me credit them both. To what extent? To the extent of 6%. 800 into 6% is 48 and 48. Amount together comes to 896. Understood? After this 19th April, on 23rd of April, we received rupees 510 from Ganesh on his account of rupees 600. We are supposed to receive 600 from Ganesh. We received 510. Remember, this 510 what we received instead of 600 is not full and final settlement. It is on account. So on receivable of 600, Ganesh has given us 510. Ganesh will pay us the balance 90 later. When Ganesh pays us balance 90 later, then I'll record it. For now, entry will be only for 510. Is the balance 90 discount allowed? No, it is not settlement. If they would have told account is fully settled, that 90 would have been discount. Because they have not told it is settled. Ganesh ledger will still have receivable of 510 for us. Sorry, receivable of 90. Let's keep it that way. So whatever money I have received from Ganesh, I would debit it to cash account, credit it to Ganesh account to the extent of 510. Money is received from Ganesh on account, not on full settlement. After 23rd April, on 25th of April, we have a transaction. Interest on loan from Akash, rupees 1000 is due, but it is not paid. Oops. It is an expense, interest. I would debit it. If I would have paid, I would have credited my bank account. Because I did not pay this interest, I will credit it to outstanding interest or interest payable account, which is a liability to me. This liability is to the extent of 1000. I repeat, if I would have paid this interest, entry would have been interest to cash. Because I did not pay, entry is interest to interest payable. After this 25th of April transaction, we are done with all the transactions. Actually, the expectation from this question is just this much. But just to make you understand the treatment of net GST amount and then payment, I'll show you something more. Focus. In the first journal entry, we have no implication of GST. This is a working note. I'll just give a slight change in the color for it to stand out. And here we have output CGST and output SGST of 1350 each. I have a liability to pay GST to government, 1350 towards CGST, 1350 towards SGST. Do I have it anywhere else output? No other output. So here CGST, I'll draw a column and write output. This is payable to government, 1350, 1350. Got it? Then come to the table again. Do we have input CGST and SGST anywhere? Yes, I have it here. Input CGST is 480, input SGST is 480. This is what I have already paid, which is my asset because it is having debit balance. To reverse this, I have input CGST and input SGST credit by 48. So my input CGST of 480 debit is nullified by 48 and input SGST of 480 is again reduced by 48 because of reversal. So my input here is 480 minus 48, 480 minus 48, which is 432, 432. Input 432, 432 is what I have already paid to government. 1350, 1350 is what I have collected to be paid to government. So out of this 1350 CGST, what I am supposed to pay, because I have already paid 432 on purchase, I only have to pay the difference amount, 1350 minus 432, 918. And again on SGST, I have collected 1350 from my customer, but I have already paid 432 through my supplier. I have to pay only 1350 minus 432, 918 rupees of SGST to government. So if in case there was a need be for us to write the entry, we would have to pay 918 of SGST and 918 of CGST. And this will be not written straight away. We had output CGST, output SGST credit. We will debit it. Output CGST, output SGST debit by 1350, 1350. Input CGST and input SGST was debit because it was input asset. I would credit that by what amount? 432, 432. To close these ledgers, differential figure of bank account will be 1836, which is 918 plus 918, which will be paid to government. This entry, what I just taught you, is not what is given in the RTP. They have not asked for this entry. Nowhere this entry is there. But if this entry can make you understand a part of the GST closure as to how will it be closed and then paid, that should serve the purpose of this video. And I don't know if there will be a question on this in the examination, but I surely know that if there is a question on GST in your Jan 2025 examination, you are going to ace it. See you all with another video tomorrow in this 7-day series of Weak to Strength. Till then, remember to stay in the game.